Well. How is everyone doing today? Welcome back to Sin City Crypto. My name is David. I'll be one of your co-hosts. And today, like every single day, we're coming at you live from our studio here in the heart of Las Vegas, Nevada. Today, we have an exciting show for you guys. I'm wearing purple in honor of possibly my new favorite L1, Solana. All jokes aside, some big Solana news. Are they kind of like leading crypto into mainstream? We're going to talk about that. We're going to talk about Ethereum. We're going to talk about Bitcoin. We're going to talk about some alts. We got our man Forrest joining us. Well, you know what? No, let's bring him in. So, guys, no Robin today again. We've upgraded to my man Forrest. Robin is unavailable today. So, Forrest, first and foremost, thank you so much again for joining me today. I truly appreciate it. Do you like the Solana purple shirt I'm wearing today?
I love the Solana purple shirt. You guys know me. I'm bullish Solana. I like Solana long term. I think they're doing a lot of good stuff.
You know, now that the dust is kind of settled, you know, everyone was bashing on Solana. I bashed on Solana. Rob's bashed on Solana. A lot of channels have bashed on Solana. You have not. And now you are reaping those rewards. People saying, you know, Forrest was never down on Solana. But we're going to get into that news soon here. We got some charts to show you guys on some altcoins. But first, Forrest, how you feeling today, man? Is there a reason you're wearing green? Is it because today is green, or?
It's because it's like cold and rainy outside, and I'm in Southeast US, so it's like it's supposed to be summertime. So I don't want to turn the heat on, but it's legitimately cold in here. I don't know what's up with the weather.
But that doesn't explain the color.
Oh, green, yeah, we're pumping. We're pumping.
We pumping, babe. We are pumping. You know what's not pumping for us is real quick. If you're not familiar with our channel, we take old, boring, stale information and package up into fun stakes. That's what Robin does. So now that that's out of the way, if you're new here, please say hello. We'd love to personally welcome you. So Forrest, I want to.
No, when I imagine somebody that never saw Rob and saw you doing this, what is going on with this guy?
Okay. If they keep watching, they'll learn. Now, Forrest, I want to share a chart with you, and don't mind, you know, I got the watermark in the background, but don't pay attention. If I showed you this chart, what does this remind you of? Does this remind you of maybe a meme coin that rugged, or an NFT project that fell by the wayside?
I would say that's a rug pull.
That's a rug, baby. Well, guess what? It ain't no crypto project. It is a large bank. First Republic Bank. We're actually just gonna get into it right now.
Last Republic Bank.
So Last Republic Bank, said Rocco. That's a good one.
Rebranch.
First Republic Bank dives another 20% with Bitcoin ready for 40K. A couple of things I've highlighted here. Bitcoin tagged 30K into the April 26 Wall Street Open as bulls gain further momentum from U.S. banking woes. This centered around First Republic Bank, which revealed a $100 billion reduction in deposits this week. The U.S. government was reportedly uninterested in intervening on the day, according to a source cited by CNBC, as the bank stock opened down another 22% before being halted for volatility. And then this little piece here, if the government were to refuse a bailout of First Republic, Arthur Hayes argues it could set off a dangerous chain reaction of insolvencies. Then we have this tweet from Cameron Winklevoss, the founder of Gemini. First Republic Bank is down another 35% and falling fast. If this was a crypto bank, it would have been assassinated weeks ago. The fact that it hasn't been taken into receivership shows just how blatant the double standard is. Forrest, now I know yesterday I threw like 6 questions at you at one time, and I'm sorry about that. So I'm going to break these down. And the first question I want to ask you, when Silicon Valley Bank went under, right, and everyone started freaking out, Bitcoin went from 20 to almost 30K. And at that point, you know, we kind of started talking about, hey, does Bitcoin pumping because this bank failed, because banking is failing? But people were still unsure. They weren't willing to draw that line in the sand and say, yes, this is definitely a reason why. Now, today, with First Republic being halted for trading and the whole bank woe, you know, everyone's worried about other banks going under, Bitcoin goes from 27.2 to 30K. Is there any shadow of a doubt now in your mind that these two Bitcoin moves are directly correlated to these banks going under?
Yeah, I think we've just we're already in an established uptrend, and a lot of confidence is coming in that the bottom is actually in, right? When we were sitting between 15 and 18, even $20,000, kind of chopping around sideways there was a lot of question as to whether or not the bottom was in. And then we fired off the bottom at the beginning of the year. And then once we kind of had fired off the bottom, we were in a position where, all right, the bottom is likely in. And these news events can absolutely correlate with people, the banks, going under can absolutely correlate with people wanting to potentially hedge with Bitcoin. Now, a word of caution around this is that we saw Bitcoin drop from $69,000 all the way to $15,000 in the bear market. And all the while, people were talking about Bitcoin as a hedge against inflation. Meanwhile, inflation was running rampant. And now people are talking about Bitcoin as a hedge against banking collapse. And I don't disagree with that. I don't disagree with that. But what I would caution is that we might be in kind of the Goldilocks zone right now, the sweet spot, where the cracks are starting to form. They're starting to separate. Banks are going under. But nothing is... The average person may not necessarily be feeling... We're not in an extreme situation yet. And I know that sounds kind of crazy to say, like, banks are some smaller banks are going under. And that is a very extreme situation, but it's not like cataclysmic yet. And if things just continue to worsen and worsen and worsen, there may come a point where people start second guessing Bitcoin again. And they may say, okay, well, maybe Bitcoin's a risk asset. And then you see people go even deeper onto the risk off curve and go more towards gold or silver or something that's more traditionally a risk off asset. So again, I will say I agree with the idea that Bitcoin is very likely pumping as a result of these banking collapses. But if things get worse, I want to caution people of, hey, total collapse, or there may be a level of discomfort and a level of collapse that Bitcoin maybe gets treated as a risk asset again and loses that correlation. It's too early to tell.
Okay, if you were to put a percentage on that, you got a number in mind?
In terms of its correlation, or?
Yeah, in terms of if that scenario does play out, your caution scenario.
Like what? How? I don't know if I understand the question.
You're cautioning people, which is good, saying, hey, if this thing gets much worse, people might step back and say, maybe Bitcoin is still too risk on. What are the odds of that happening versus the trend continuing and banks start collapsing, Bitcoin starts moving up?
Gotcha. Yeah. So it's tough to tell because ultimately, the yield curve is super inverted right now. It's not an ideal scenario. And I think to better illustrate this kind of scenario, what I mean by this is at the end of the day, look, people still have to pay their bills in dollars. We're not at the point yet as a society where people are paying their bills, their mortgages, their car payments, their grocery bills in Bitcoin, right? So it could potentially get bad enough, if it does get bad enough, that people need money and they no longer can just invest in Bitcoin, and we get a full-on recession. Guess what? People have to sell their assets. People have to sell their cars, their homes, their Bitcoin, their 401, or not their 401k, potentially their 401k, but they have to liquidate assets, and that's the scenario. I'm saying if things get really, really bad, do I think? I don't know. I couldn't even begin to assign a percentage to that. I think it's a real plausible chance that things do get really bad. I mean, we've seen really rampant inflation. I'm not necessarily 100% convinced that the Fed has everything under control and is going to be able to steer us into a soft landing. So look, I do think that there's a legitimate scenario where things get bad enough where Bitcoin maybe does reverse correlation and people actually do have to start selling off some of their investments. Again, I think it's important to be aware of both scenarios, but for right now, it appears that Bitcoin's correlated. Bitcoin's loving this. The markets for crypto are loving the fact that Bitcoin is being treated as a hedge against financial collapse. And right now, that's the move to get on board with.
The maxis are singing the praises of the banks failing. Now, I want to pivot to what Cameron Winklevoss said in his tweet. He said that because First Republic has not been taken into receivership yet, like Signature Bank was, that was now for sure a target on crypto, do you share the same sentiment as Cameron does? And, why would you not take this one into receivership when you did Signature Bank? A lot of people said prematurely. Do you share Cameron's same sentiment?
Yeah, I mean, look, I agree. I think it's become super apparent at this point that there is a bullseye on the back of crypto and anybody who's associated, any institutions that are associated with crypto at this point. The powers that be, whoever you may believe that is when you put on your tinfoil hat at night, the powers that be, there's a very clear directive against crypto. We see it with Gary Gensler. We see it with all of the stuff that's happened, with Silvergate and Silicon Valley Bank being crypto friendly and being targeted. We've seen too much evidence to deny that the United States or whoever it may be pulling strings has a very clear directive out against crypto, and what their intentions are or why they have that have it out for crypto is very likely they're just trying to slow it down because they see it as a risk against the sovereignty of the US dollar.
Okay. I agree with what Cameron said. It's funny how you had a bank, Signature Bank, that they had a run on withdrawals, but according to their staff, they were getting ready to open on Monday. And the funny thing about the timing was, like 2 days prior, day prior, the Fed had come out and opened up that discount window. So they would have had access to money if they needed it. But the FDNY stepped in. FDIC stepped in. They took over the bank and no, it had nothing to do with crypto. We were just worried. Here you have a bank that is so bad. $100 billion in a week has flowed out of First Republic. And guys, remember, you had what was the number? $33 billion from these top banks like JP Morgan, Bank of America, Citibank. They dumped that kind of money into First Republic, and they're still seeing these withdrawals. They still have to halt trading. And you got our regulators like the FDIC sitting on the sidelines like, no, I think we're going to draw the line here. Funny how that works. Real funny how that works. Now, here's another funny thing. It kind of pissed me off as I'm reading it. So this article, people must accept the fact that they are becoming poor, said Bank of England chief economist. The top economist at the Bank of England says people must accept the fact that their financial situations are eroding. And the person's name is Hugh Pill. Hugh Pill needs to take a chill pill. Says people of all stripes should stop seeking higher pay to maintain the lifestyles they are used to. I am so sorry, man. I worked my behind off. I worked my ass off. I got to this point. I enjoy a lifestyle. And because of what the people that were elected and the people that they put in place at the central bank, they decided to partake in unnecessary monetary policy and inflation and printing money and this and that. I should accept the fact that I'm now more poor. I should stop buying things that I buy. I should stop eating the food that I was eating. I should stop living in the house that I was living in or taking vacations or whatever the case may be. So this next is a quote. So somehow in the UK, someone needs to accept that they're worse off and stop trying to maintain their real spending power by bidding up prices, whether through higher wages or passing the energy costs through on to customers. And what we're facing now is that reluctance to accept that, yes, we're all worse off. Well, maybe not all of us. Maybe not you, Hugh Pill. Maybe you're not worse off. Maybe you don't have to take a look at cutting back on your spending or moving into a smaller house. Instead, people try and pass that cost on to one of our compatriots, saying, we'll be all right, but they will have to take our share too. In August last year, Bank of England Governor Andrew Bailey expressed similar sentiments. He told BBC's radio podcast that people should not ask their employers for wage increases. Forrest, are you as upset as I am? And out of respect for you, not to put you in an uncomfortable position, if I'd be throwing up a curse storm right here, but I'm holding back. What does this say about just what are your thoughts? It's too much running through my mind.
Yeah, it reminds me of Klaus Schwab and the IMF coming out and saying you'll own nothing and you'll be happy. Look, at the end of the day, this is due to gross mismanagement at the federal level of multiple countries and institutions. But and you could even. Yeah, I mean, it's hard to blame it on anything else than that. Just reckless printing of money, rampant inflation, an inflationary currency to begin with, a lack of willingness to adopt blockchain and cryptocurrency based solutions. Look, this is unacceptable. To just sit and say that, hey, you're doing the same amount of work, you're working just as hard as you were, and now you're going to be worse off. And what's sad is that like the people that this affects the worst are generally the people that have like, I don't want to say blue collar, but basically like potentially like blue collar workers and blue collar careers that have like a salary. Not people that are like, if you're super savvy and you're like creating your own business and your own, the economy gets worse, you'll probably find a way to find new opportunities. But if you're a firefighter, if you're a police officer, if you're a blue collar worker, if you're a farmer, like you can't depend on the ability to pivot in your business model. You're subject to the wages that the government pays you or the wages that your employer pays you. And that's what's really sad about this. It's affecting those people really, really badly.
It is sad. And, if that doesn't tell you what situation we're in and whether you should trust our government, and this kind of leads me to the whole this government war on crypto. You have the IMF throwing out ultimatums to countries that are literally about to collapse, saying, we'll help you, but you need to be anti-crypto. We find an area to give us some prosperity, to help us build some wealth, and then try to take that away from us. And on the back end say, nah, you just got to put up with being more poor now. That's complete and utter BS. And if that doesn't make you bullish in the crypto space, I don't know what will. All right, let's move on to the markets. Let's take a look. By the way, guys, before I move on to the market, if you're new here, say hello. Rocco's going to compile a list for me, and I will pronounce your name correctly and welcome you to the Sinner community. Also, make sure to hit that like button. Where are we at on the ratios here? 105 viewers, 58 likes. Not bad. We can do better. Now, let's move on. Coin market cap. We have. Makes it a little bigger for you guys. The total crypto market cap is coming in at $1.229 trillion, with volume coming in at 52.7 billion. Bitcoin dominance is inching up to 47% again, just a smidge, a tenth of a percentage point under. ETH dominance, it did get up to about 19.5, 19.6%. Now is down to 19.1. As far as where Bitcoin is at, $29,700, up almost 8% over the last 24 hours. Now, Forrest, we're going to stop there. I'm going to take a look at the Bitcoin Fear and Greed Index. We're coming in at a 56. That is up from 53 yesterday. So we are officially in greed territory. What changed in Bitcoin's chart? Let's take a look there. What is it looking like? Where are we gonna meet resistance? Are we gonna be able to crack 30K and stay above it? What are the charts saying?
Yeah, absolutely. Let's take a peek at the Bitcoin chart here. Okay, so if you guys follow this channel or my channel at all, I like to use margin pressure levels. These levels just isolate for leverage trading behavior in the market. They show you where buying behavior is going to very likely subside and be disincentivized, which oftentimes leads to large corrections. And they can also show you where buying behavior can come in as support, right? You break through it, you find support on top of it. So if we look at our margin pressure levels, the big level was our previous top here at $31,000. So we are approaching that level once again. But if we move this set of margin pressure levels over to our last swing low, what we're actually going to find is we've broken through a really key level today. And we were talking about yesterday and really for the last couple of days, we've been talking about the bullish divergence, and we'll cover that in just a second. But breaking through 29.3 again was actually really, really nice, because you can see we held it briefly as support. We fell below it, right? We tested tested this range and this kind of node of volume here, found some support, and we broke through. And now what we want to see is a hold. So we've seen the reclaim of this level, and that in and of itself is pretty bullish. But if we do start to see a correction, we want to see this level hold as support. And there's your inverse head and shoulders, right? Hopefully you guys can see that. I'll zoom out a little bit because I know it can be difficult to see if you're on mobile. So right there would be your inverse head and shoulders. If we come back down to back test that, hold that, then the level to take out is going to be 31K or so, which is our next margin pressure level up. But we had the drop on this bounce. We talked about this on Bitcoin and Ethereum on both the 4-hour RSI and the daily RSI. We had some bullish divergence, which I will show you guys here. So we came in and made a little bit of bullish divergence. It was more pronounced on the Ethereum chart than the Bitcoin chart. But then on the daily, we had much clearer bullish divergence. And that was right here off of these. We made a lower low in RSI and a higher low in price. Bounced really, really aggressively. Bitcoin looking solid after taking out these levels, right? Looking to retest and move up higher. We could absolutely go higher. I will give you the kind of stretch target for a larger move. That would be around $39,000, right? That's that 2x long margin pressure level off of this last swing low. And one of the reasons we were paying attention to this RSI so carefully is because we're following a very similar pattern, actually two very bullish patterns. One was our last bear market rally, right? And I've covered this before. But what sent us into this last aggressive parabolic move of our is 86% move out of Bitcoin here was this bullish divergence, right? We had the bullish divergence on the daily. It was very strong bullish divergence. We went up and we tagged almost $14,000. The other part of this is that we have a very, very similar pattern, right? So we had an aggressive move upwards, right? Some consolidation, a markup in price action, some distribution, a mark down to retest that prior volume node, that prior support, and then we printed the bullish divergence and we went big. We saw a very similar pattern going into the 2020 cycle, right? The 2020 cycle, we saw again more bullish divergence. Right, more bullish divergence. We had this markup or this bounce in price, consolidation sideways, markup, distribution, mark down, held that prior range as support, and then we were off to the races. And the last thing, I know I'm spending a lot of time on Bitcoin, but the last thing I'll show you guys here is this same exact pattern, right? Once again, we see this large bounce, this large recovery, sideways consolidation, right? We see the markup, the distribution, the markdown, hold that prior range as support, and now we are firing off. So we can absolutely, be careful because we have plenty of resistance at $31,000, but we could absolutely see this thing run away and go, 33, 35, 37, 39K.
Okay. Now, so if we do get to 39K, are you shorting there?
Definitely trimming most of my positions in just about everything. I will move more risk off, probably to something like gold, mix of gold and some stable coins. But gold looks fairly decent, I think, for the next year or so. Pax G, obviously. Am I shorting some specific levels? Yeah, potentially, but I do want to be a little bit more careful about just blindly shorting crypto when it's in an uptrend.
I don't think I've asked you this question, Forrest, but I like to ask TA experts. When would you feel comfortable saying, all right, we're in a bull market? Because you said bear market rally. Yesterday you said a bear market rally. Is there a price level? Is there some sort of market structure you look for? Is there some sort of cross of moving averages? What is it for you when someone asks you, are we in a bull market or is it just a bear market rally? What does it take for you to say, yes, we're in a bull market?
Probably new all-time highs in a large portion of altcoins as well as probably Bitcoin. Like I would probably say, until Bitcoin breaks through 70, 75K, I'd be careful to call this a bull market per se, which doesn't necessarily, just because I'm not referring to it as a bull market does not mean that I'm not bullish and does not mean that I have not been bullish. What I am is I'm very cautious that, look, if you start calling this a bull market, all of a sudden those predictions for 150K Bitcoin come out. And in this particular rally, this particular run, I just don't expect 150K Bitcoin to be feasible. So I would look for new all-time highs, or alternatively, the timing lining up with the Bitcoin halving, right? So if we were starting to see this type of price action moving into or directly after the Bitcoin halving, because we've seen that pattern of bull market, coming in, or a bull market coming in line with every Bitcoin halving, I'd be much more eager, much more willing to say, hey, probably in a Bitcoin bull market. But it really, when I say bear market rally, we're in like a bullish trend. We're in an uptrend. I don't recommend trading against the trend. Aligning yourself with the trend is usually the best idea here. But it's really just semantics as to how you kind of refer to it.
Yeah. I think that's a good point, and I've gotten different answers from different people. So it's nice to get different perspectives. And so, on this channel, we talk about not keeping, especially our audience, keeping them in an echo chamber of David, Robin, and Rocco. We want to get other people's opinions in there. All right, let's move on from Bitcoin and move on to altcoins. So this is Crypto Bublés. Few big gainers today. We have Render, XRD, Caspa, Injective. Conflux is up 17.1%. Now, Forrest, XRD, I'm bullish. Layer 1 DeFi. Why am I so bullish on a Layer 1 DeFi? Well, every DeFi I know is built on top of a Layer 1, making it essentially Layer 2. And for me, the more points of failure you remove, whether it's bridging or whatever the case may be, I think is a net positive. With XRD being up 25.3%, if I am looking to accumulate a nice bag, what are some levels, some strong support levels to be able to buy in at? Is maybe now a good time to buy? Although we say, never to buy on pumps. What is the XRD chart saying, or what is it telling you?
Yeah, absolutely. So I will once again, I'll share my screen here and we'll go over to XRD. So the first thing, I just want to take a peek at circulating supply versus max supply. We're looking at close to 40% or so. So there are some emissions here to be well aware of. Now, I am not familiar enough with XRD to give a valid fundamental thesis for it. So the fundamentals could override the technicals. So I'm going to be treating this predominantly technically. We throw on the easy bands. Look, we're pretty overextended here, and that doesn't mean that we can't go and rip continually higher and stay overextended. Low caps can go well above the red easy bands all the time. You can see crazy markups, even like Binance Coin when it ripped and completely repriced when they launched Binance Smart Chain. Look, it went well above the red easy band, so it's certainly possible. But if I'm looking to accumulate like a long-term bag of anything, I want to buy in the depths of despair. I want to buy when the market is not being rational and not accurately pricing things, right? Buying this at 3 cents versus buying it at 10 cents, there's a really big difference there. So I would advise caution here for sure. Doesn't mean it can't go higher, but it's just like there's so many opportunities in the market. Look, I think it's Warren Buffett's saying is like, the market is an instrument for transferring money from the impatient to the patient. So, look, the market has kind of showed its hand here. It's shown that it likes XRD. But there will be market circumstances at some point in the future that bring this back down to the green easy bands, whether it's in the next couple of months or a year from now. So if you're patient enough to wait for a green easy band entry, you're almost always going to have less risk. Even if you got trigger happy and you bought it at its first green easy band touch initially in the bull market, you were buying at 13 cents, and even right now you're still close to break even. Versus if you were buying it when it was above the red easy bands, you bought it at 50 cents and had to sit in that drawdown all the way to 3 cents. So by waiting, you just mitigate your risk here. As far as specific levels go, we'll zoom into the 4 hour a little bit here. I will say this pattern, in a bullish market trend, I mean, where you take out the downtrend line, and start pumping off of it, that's usually a pretty bullish trend. It usually means that we're going to see some additional upsides out there. So that's one thing to point out. Our short margin pressure levels off of our swing high showed us the support levels and resistance levels. So shorts kind of had to step out of the way here around 7.7 cents. We got that. They stepped back in and pushed it back down at around 10.2. And then now we're just kind of consolidating here in this 2x to 3x region, this range here. So I'd look to probably, if you're going to try to range trade this, you want to at least wait for 10.2, wait for a pullback, and then, look for something like that, some consolidation and a move higher. But I would definitely be cautious buying into large pumps like this, even with a bullish market that we're in right now.
Yeah, my saying is never jump on a high-speed train. You got to wait for it to get to the next stop. I want to ask you about another altcoin. And so, looking at the crypto bubbles, we got Optimism up almost 7%. But what worries me about Optimism is this. So this is a website called token.unlocks. You can see here OP is seeing $5.6 million a day of essentially token inflation. And if we click on this chart here, it gives us a breakdown. And I want your opinion on this, Forrest. So we're seeing here there's still about 70% of their tokens that are locked. But what kind of worries me is, leading up, we only have about till the end of May before approximately 1.5 billion tokens for investors and core contributors are going to start unlocking at a rapid pace. Does this worry you? OP, it was I believe it was an airdrop, correct? OP was an airdrop. A lot of hype around it. Everyone's talking about it's going to overtake Polygon for the #1 layer 2 on ETH. From an investment standpoint, looking at this vesting schedule, what are your thoughts on investing in OP with everything kind of, on the table here as far as, the tokenomics and everything?
Yeah, look, the technology is great. It could say the same for Arbitrum and just, roll-ups in general. But and for most Ethereum layer 2s right now, Optimism and Arbitrum and even Matic, solid layer 2 technology, and that's the big narrative. The cheaper block space for Ethereum and scaling Ethereum, that's a big narrative. But I would not touch this with a 10-foot pole. As far as hop in and out of trades in the short term all day long. But if your plan is to hold Optimism, I just believe you're going to be way better off holding. If you want exposure to the Ethereum narrative, you're just going to be so much better off holding ETH. The L1 here. And the reason being is, look, if there was going to be 50% inflation in the US dollar next year, would you hold US dollars? If there was going to be 100% inflation per year in any currency or any asset that you own, would you hold that asset? The answer is probably no, or at least I hope it would be no. Look, that token unlock of $5.6 million per day. Now, not necessarily all of that gets sold and hits the market and sell pressure every day, but a portion of it does. Let's just say it's half. If half of that's being sold on the market every day, the market needs to find $2.5 million worth of demand per day for Optimism tokens to continue going up in price or just to hold price steady. So you're just swimming upstream, and you may feel like, the technology is so great, layer 2, the narrative for Ethereum. If Ethereum goes up, Optimism will go up. But look, it's just you're swimming upstream, and there's a lot of other opportunities in this market that don't necessarily make you fight that same inflation. There's a reason that these low float coins, they pump really, really hard, but if they have a low float and high inflation, they just bleed right back out. We've seen it time and time again. We saw it with a ton of Solana-based coins that were invested in by Alameda Research. They designed the tokens like that on purpose to benefit VC investors and to pump the prices and to basically cook the books to make it look like they had more money than they did. And this is no exception to that. It's not necessarily malicious. bearish, but in this case, but it is where Optimism stands in terms of its token inflation. So I personally, look, Optimism tech, great, cool, bullish on layer 2s, bullish on the adoption of that technology sector, but brutally bearish on the tokenomics. So I personally don't touch stuff like this. It's just easier to stay away.
You brought up, if it's bleeding out 2 million a day, you got to find that demand. The problem is, the only thing the token does is governance. You don't need it for gas fees. It's not like the network starts getting more TV total value locked and whatnot.
Optimism you do, Arbitrum you don't.
Oh, Optimism you do use for gas fees.
Optimism, I do believe you can use Optimism as gas fees. They may have an optional between being able to use Optimism and or ETH, but I've used Optimism and it does use Optimism gas fees. I'm almost positive. I've only used it a couple times. Arbitrum, though, is governance only, which is just like blows my mind why people buy Arbitrum. But
and
maybe they know something they don't.
Well, in that case, then I guess that changes very little. But I guess for me, someone said. Alex or someone in there said, I'm not worried about token unlocks. What worries me is in about a month, we're going to get a majority of those tokens unlocked. They're going to be from investors and core contributors. And we know investors invest to do what? To make money. So you got to assume a lot of that they're going to sell back into the market. Now, let's move on to the biggest news. Solana. So it's at $22.52. We're not getting into the charts yet, but I'm going to share this piece of interesting news. Solana unveils ChatGPT plugin that retrieves on-chain data. Solana Labs has revealed a ChatGPT plugin that will allow chatbot users to interact with the Solana blockchain. Solana Labs said that users will be able to use the plugin to check wallet balances, transfer tokens, and purchase NFTs from within ChatGPT. In one screenshot, this is interesting. In one screenshot, a user asked for a list of NFTs owned by a particular Solana address. In a second example, a user asked for help sending a Solana transaction to another address. And in a third, a user asked for help purchasing an NFT. Each prompt returns the relevant instructions or information in natural language. Solana did not state when a plugin will be launched for general use, but said that developers can create their own plugins using the project's source code. This was interesting to me, is a user asked for help buying an NFT and ChatGPT, returned relevant instruction. We've seen, love it or hate it, right? Love or hate Solana. Solana has become very polarizing. People either love it or hate it. I've hated on Solana, but I'm a man of facts. And, I'm starting to kind of change my outlook on Solana here a little bit, maybe become a little more bullish going into the forest camp. But is between this and the mobile phone, and I know people laugh at the phone, but the utility of that phone can do, and you mentioned some of it yesterday, is Solana kind of leading the wave of getting the masses into crypto, breaking those barriers to entry, making it more practical?
Yeah, absolutely. It's funny. It's so weird. Like everybody just gets so hung up on like one little thing about a layer one that and I say little thing, but a lot of times they're big things. It's like Cardano. People will hate on Cardano because the Haskell programming language, there's fewer developers to pull from, and you want developers on your protocol, and people get hung. And then boom, Cardano 100x's or over 100x's last market cycle. And if you didn't buy it because of it used Haskell programming language and you got caught up on that one thing, you missed out on a lot of opportunity. Matic, people love to hate on Matic because the UI, UX, and the speed and the technology isn't super crisp. It's not super clean, and when you compare it to other layer twos, it's not as good. But they crush it with biz dev and partnerships, and they have big names associated with their brand, and they're onboarding big enterprises. Solana is absolutely, yes, it's gone down in the past. It's that's a major pain. It may be a concern in terms of centralization. It may be a concern in terms of building DeFi on top of Solana, because if it goes down and you have price movement, you potentially have liquidation issues, and it makes it less attractive of a chain for DeFi. But it's getting more and more robust. And what they're actually really, in my opinion, excelling at is getting the average person onboarded into crypto. They're doing it through consumer applications, consumer hardware. You've got the Solana phone, this big mint, the number one project for NFT project on Solana right now, as of last week. It minted. It was Mad Lads, and they're associated with Backpack. And we briefly talked about this, I believe, yesterday. But it is a phenomenal wallet that is very reminiscent of an actual app store. So you're going to have like decentralized applications within this Backpack wallet app store, and it's just way more intuitive to actually use. It's very reminiscent of like iOS. That's going to be integrated into Solana phone. Now you got this ChatGPT thing, which they're doing a great job of onboarding additional people. Like, not everyone knows how to set up a seed phrase and set up a wallet, but now you can ask ChatGPT and directly now you can ask, like, what is this wallet? What NFTs does this wallet have in it? What are the top NFT projects on Solana? Or like all these just basic questions that you can get answers to that you would normally have to join a Discord group for, find somebody, find a channel, a YouTube channel, find a tutorial video to do. You just ask ChatGPT. So I think they're doing that's the lane that they are specializing in and really leaning into and beating everyone else at, to be quite frank. The UI UX on Solana is really, really good. Obviously, when it's not down.
Now, I have, obviously, you're running a business, and if Solana is going to start onboarding a lot of these traditional companies, whether it's someone launching an NFT project, DeFi, like as an owner of a project, or if you're Amazon or Google or another big company and you're looking at blockchains to choose, and put yourself in the shoes of Anatoly Yakovenko. And I sit down with you, Forrest, aka Anatoly, and I say, look, it's down to you and Ethereum. Okay. I am extremely concerned that the network might go down and it'll disrupt my business. And what would be your rebuttal to that?
Yeah, a couple of things. So for one, I can't speak to the technical side of reasons specifically for outages. And I'm under the impression that that's something that's become less frequent and less common, and it's getting better and better and more robust. However, the two main advantages of Solana are that it does scalability on the layer one, right? So the way Solana works is like Ethereum gets really clogged up if there's a big Ethereum mint. But my understanding with Solana is that there's like parallel processing and there's like different buckets of block space. So like if you have a big mint on Solana, it's using a portion of the network, and that portion of the Solana network might get a little bit clogged up, but it's not going to affect all the rest of the network and all the other use cases that are going on in parallel. It's not going to affect the payment processing. It's not going to affect the DeFi. It's not going to affect all these other applications over there. So it might slow down just for that one use case. Whereas with Ethereum, you have, and I'm as bullish on Ethereum as you can be. But on Ethereum, if you have like one event, the block space is shared across the entire network. The other piece is that it's got all the liquidity. It keeps all the liquidity on the layer one. One big issue with Ethereum is that you have liquidity, and more liquidity is better, right? You want thicker order books. You want less slippage. You want all the liquidity concentrated into one blockchain, ideally. With Ethereum, you've got the liquidity getting fractured across all these different L2s. So you've got an Ethereum versus USDT pool or pairing on Optimism. You've got that on Arbitrum. You've got DEXs on Matic. You've got them on L1 Ethereum. You've got them on Binance Smart Chain, and all of these different blockchains have different liquidity pools. And the alternative would be to combine all of that liquidity and just have much better liquidity across the board, and not have to have like separate NFT ecosystems on every single chain. That's one of the reasons why I believe Solana has crushed it with NFTs, is because all of the liquidity is on the layer one. And it's just, cheaper transaction fees, right? It's very, very cheap and very fast to transact on. The overall user experience is, in my opinion, the best of any blockchain that I've personally used, and I've used all of them, with the exception of a few here and there. But As far as the speed goes, it's great. It's a really pleasant, good experience. And I've been using Solana for a long time. I've been using it for probably over the past year, and it's only improved as time has gone on.
You know, I one time there was a NFT project I minted on ETH, massive like hype, right? And I ended up paying for 2 NFTs. I paid $1,000 in gas fee on ETH. And so, you know, you minted something similar on Solana. What did you end up paying for gas in Solana on that super hype mint, which I know sold out in almost seconds?
Yeah, it's like less than a cent, I believe. It's like 0.00005 Solana. It's stupidly cheap.
Yeah, that's crazy. Well, look, we all talk about we want the space to get bigger. We want retail to come in. We want people to see how great our space is. And so when we have a project that is doing that is breaking those barriers to entry, right? And we can still be critical of their flaws. And, you know, we can hold them up to a certain standard. Hey, if the network goes down again, this is not okay. What are you doing to fix it? But let's give credit where credit is due. Is what Solana is doing is they're making it practical for regular people, not you watching, because you understand, you've been in the space, right? I highly doubt anyone watching this show right now hasn't been in the space for longer than 3 months or less than 3 months. So it's those people, the ones that have been in the space less than 3 months, the ones that are brand new, that I can just say, yeah, you just, hey, on Solana, just ask it, how do I mint an NFT? Ask it, how do I set up a decentralized wallet? Ask it, how do I send money here? Instead of having to sit down, write a book, or tell me, watch this video, and then watch this video, or hey, let's have a meeting because it's going to take me an hour to, you know, help you understand and walk you through that process. So when we have a project helping us, you know, progress our space forward, we got to give credit where credit is due. Now, giving credit where not credit is due is to Binance. So this news broke yesterday on air. We didn't have all the details, but we have details now, so we're going to talk about it. Binance bails on the $1 billion Voyager deal. And if you're a Voyager creditor, this sucks because you've been rug pulled more times than, I don't know, a project that's rug pulled a lot. So this is from Blockworks. Binance has terminated its $1 billion asset purchase with Voyager, a deal that was officially ready to proceed just days ago. We finally got the stamp of approval from the government. And then Binance is like, nope, gotcha. That Dave Chappelle meme. Can't say the other word. I don't want to say. Bankrupt Voyager called the termination disappointing. Said, quote, our Chapter 11 plan allows for direct distribution of cash and crypto to customers via a toggle option on the Voyager platform. And I'm going to go over that tweet here in a second from Binance. Second tweet in the thread told customers that Voyager will move swiftly to return value to customers via direct distributions. We will provide more information on next steps and any actions customers need to take in the coming days. Now, Robin did a video yesterday, talked about just give people their money back. Whatever you got left, just give it. Let people move on. Prices are still cheap. Let them get in. And then we had this tweet from Binance US. Binance.us has made the difficult decision to exercise its right to terminate the asset purchase agreement with Voyager. While our hope throughout this process was to help Voyager customers access their crypto in kind, the hostile and uncertain regulatory climate in the United States has introduced an unpredictable operating environment impacting the entire American business community. We are focused on creating a safe platform where our customers can participate in the digital economy. And we had this tweet. This is kind of like a tinfoil hat moment here. Binance pulling out a Voyager deal is part of the conditions of an imminent settlement with the CFTC. The commissioner today said there is not an immediate path forward. That doesn't mean that there couldn't be one and hopefully will be one. Now, it's kind of interesting to me that Binance.us is over here on this Voyager deal saying, nah, we backed out because of uncertainty. But as far as I know, they still have their US platform. We haven't ever heard any news of Binance.us leaving the US. So do you believe what Binance is saying here, Forrest? Or are you going to put your tinfoil hat on and say there's something bigger at play here?
So if I'm not mistaken, what the theory is that the CFTC is saying, behind the scenes, Binance don't go through with this deal because, I guess what I'm missing is why would the CFTC want to block this?
Forrest, why do our regulators do anything they do? I don't think anyone has the answer to that.
That's true.
To that question.
Sure. No. I guess it's yeah. I mean, it goes back to it doesn't make sense because the only lens that it makes sense through is if you're of the opinion, which I am, that whoever it is, the powers that be, the government wants to slow down the adoption of crypto, and anything that they can do to stand in the way of a good outcome or a win for the crypto space and industry as a whole is what they're going to do. So. Yeah, not surprising, honestly.
Some people are saying that this means that Binance US is, in fact, in trouble financially, or else why wouldn't they do so? Other people are saying because they had access to all the creditors, their information, their addresses, their KYC information, and they just kind of kept their hat in the ring, got all the information they wanted, collecting data, and now they just pulled out. Do you think that is maybe a possibility? You think there's any foul play on the part of Binance?
Tough to say. I want to think that CZ is smarter than that. To my knowledge, though, if I'm not mistaken, Binance US and Binance .com are two separate entities, and Binance US chiefly licenses the name, and they're less connected than most people think. I could be wrong with that, but I remember reading kind of a thread or an article on that a little bit. So it's tough to say. I would imagine that CZ is pretty smart, and I've been told by people that have been in the space a really long time that are crypto whales. And this kind of goes back to when we were experiencing all the Binance FUD and FTX collapsing. That Binance has like extraordinarily deep pockets, and they're essentially a money printer. Unless they're just outright, guilty of fraud, which is a complete possibility, they're not in any sort of financial dire straits.
Okay, so you're not worried about that. It's just. First of all, it sucks for people who have money on Voyager. It's like if the end result is going to be, hey, whatever we have, let's just distribute it on a pro rata basis. Why didn't you do that from the beginning? All that money that was spent over the last year on lawyers and court fees and this and that, how much more money could people have gotten back? At this point, I don't have any money on Voyager, but I know a few people that do. One of them is a really good friend of mine. Just give people the money, whatever's left, give them the money back. I don't know if they're going to start another bidding process. I know they said they can have this toggle option to start paying people back. Just do it from the beginning. Someone asked one of our videos yesterday, do you put more blame on Binance or the US? And I would put more blame on the US. I mean, we've been at this stage of Binance buying Voyager for well over 3 months. And it's just been this back and forth, and the SEC is trying to stop it, and then the DOJ stops it, and then so it's been going on too long. You got people's lives and people's money at stake here, and you got our justice system, our regulators playing hot potato over here. And so just kind of an update. Let's move on. So we had the big Gary Gensler hearing. We have another big hearing coming, and that is again in the House, but this time this is titled "The Future of Digital Assets: Identifying the Regulatory Gaps in Spot Market Regulation." This will take place Thursday afternoon. It's a source from CoinDesk. The House Subcommittee on Commodity Markets, Digital Assets, and Rural Development has provided the witness list for Thursday's hearing. This includes former CFTC Chair Timothy Massad. Now, the other two, we can say that, hey, these guys are going to be pro-crypto. You have Purvi Maniar, which is General Counsel at institutional crypto trading platform Falcon X. And you have Nilmini Rubin, Head of Global Policy at Hedera. Okay, so we can just right off the bat say, I don't know anything about these guys. We're assuming they're pro-crypto. The one question mark was Timothy Massad, so I did some digging. And he's a professor at Harvard, and he wrote this about digital assets. And I want to highlight this part. The problem is that crypto assets do not fit neatly into our existing regulatory framework. We've been saying this. You have people in Congress saying this, like Patrick Mahenry and Tom Emmer and Cynthia Lummis, all the people that are pro-crypto. And so we're going to essentially have, seems like, 3 pro-crypto regulation people testifying You think this would have any effect? You couple with the Gary Gensler debacle. If we try to think about what is going to be said here, will this have any effect to what these lawmakers do moving forward? Do you have any? What's the word I'm looking for here, Rocco? Do you have any confidence that maybe by the end of the year we'll see some sort of regulatory clarity in our space?
I'm of the opinion that things like this tend to move extraordinarily slow, as they have moved extraordinarily slowly for the last several years. But yeah, I mean, this is definitely a step in the right direction. I don't know how much effect it may have, but it seems, Falcon X is pretty legit. I don't know that person in particular, but I imagine he's going to be pro crypto. If you're from Hedera, you're going to be pro crypto. So, and then the Mossad guy seems, like that's a pretty logical conclusion. That's what pretty much everybody says. I mean, it makes absolutely no sense to call every crypto a security or every crypto commodity or whatever else you could call them. But yeah, I think they're all gonna take a pro crypto stance, and that's only going to help to have that kind of representation in a hearing like this. So. Step in the right direction. Gary Gensler's getting called out and grilled, and people are on to the general non-crypto world, and Congress seems to be on to his nonsense. So hopefully they'll continue to get on his case, and this will spur on some positive, actually useful regulation in the space.
I think that's the key word, is useful, right? I want to know what the chat thinks. You guys think we'll see some sort of regulation passed, the law passed, something by the end of the year? Put a 1 for yes, put a 2 for no. 1, we'll get some clarity by the end of this year via a new rule, regulation, law, or 2, no. All right. I want to move on to an opinion piece by CoinDesk again. This was kind of interesting. I'm curious to get your take on this, Force. Please enjoy the final crypto winter. This is done by Paul Brody, who's a senior editor at CoinDesk. Said, crypto and blockchain are on the cusp of becoming ordinary regulated businesses. And he's saying, while it's always extremely difficult to separate signals from noise, I see 3 big positive signs for the future in that, hey, this is the last big crypto winter that we see. First is surge in enforcement actions, essentially saying that people are more cognizant of if they do something wrong, they're going to get sued or kicked out or whatever the case may be. Second thing he talks about is contradictions and inconsistencies in public policy. He thinks that's going to get better. And also maturing industry leadership and product. Forrest, what are your thoughts on this article? And is this maybe the very last crypto winter like we are used to over the last 12 years? To be able to accumulate coins that are down 80, 90, 95% off their all-time highs?
I gotta say no. And mainly because for this to be the last crypto winter, I think we would need to completely decouple from Bitcoin, which I do believe. So I'll kind of explain why that is. There's kind of this is a super loaded question and like a lot to unpack, but like, so the bear market and bull market cycle it's volatility is, and this kind of goes deeper into why, like, as far as like a store of value for the long term, one of the reasons I'm like, I don't love Bitcoin the most is because you have that volatility. Like and it depends on like what your requirements are for a store of value, but you have volatility programmed into the actual cryptocurrency with the reduction of the halving or the halving rewards, reduction of the emissions every 4 years. That causes a supply squeeze, a supply reduction, which is going to affect price to the upside. And then you get people over leveraging to get into Bitcoin mining. And then Bitcoin miners, go underwater once Bitcoin price falls, and then they have to capitulate. And the whole system, the entire Bitcoin system it literally has volatility programmed, price volatility programmed into its code, right? You're always going to see these and they'll dampen over time, certainly. And we've already seen the effect dampen, but you're always going to have these large speculative periods and then these large drawdowns in Bitcoin. And that's totally okay. And some people are totally fine. They'll hodl through that. They're good with it. They understand Bitcoin, and that's fine. But you have that volatility programmed in. So as long as Bitcoin is number one, my belief is that you're going to see this continued cycle of Bitcoin ramping up in the bull market, people taking profits out of Bitcoin and speculating on altcoins, speculating on NFTs, right? People getting over leveraged, right? You get these echo bubbles going on. You get people that are, trying to make more and more money, and then the bubble pops and it falls back down, and people go back into Bitcoin. Or then, once prices fall, you have DeFi protocols going under, which maybe we won't see that as frequently in the future. But you also have Bitcoin miners that are extremely over leveraged, running on debt, and when Bitcoin's price falls, they ended up having to capitulate and sell some of their Bitcoin stores, which pushes the price down further. So long as Bitcoin's a core part of the crypto ecosystem, which I foresee it being for the foreseeable future, for the next 4 to 8, 12 years, I just don't see any way that we don't have bull markets and bear market cycles. Again, it may dampen, it may not be as bad, but I certainly think there's going to be periods of time where we have large drawdowns and we have seemingly, crypto winters. Because I just expect Bitcoin to be a part of the ecosystem moving forward.
Okay, even if we're at a point where there's tons of traditional businesses and companies, excuse me, that are running on layer ones like Ethereum, like Solana, like Cardano, to where you got businesses running, like you might not see an 80% drawdown. Do you think even in that scenario, we're still going to see these massive moves to the upside and downside?
Yeah, I think so. I think it's just there's going to be a lot of liquidity flowing into Bitcoin in the next halving, and I just think we're going to see the continued cycle that we've seen. Unless Ethereum flips Bitcoin, which I think is a completely logical thing to expect at some point in the next 2 to 3 years. My thesis is that Ethereum should, in general, outperform Bitcoin in the long term. But unless it flips it in a big way and kind of people stop paying attention to the Bitcoin halving cycles, like, the Litecoin halving cycles don't really matter for the overall market like they used to, because Litecoin's a lower cap cryptocurrency. Until Bitcoin's really dethroned and pushed to the wayside, I foresee us continuing to see the programmed volatility. And that, don't make no mistakes about it, that volatility is programmed into the halvings. It's programmed. We've seen it for the last for every cycle so far. For every halving cycle, we've seen that price squeeze upwards and then it fall down 60, 70, 80, 90%. Rinse and repeat. So long as Bitcoin's in charge, and number one or number two or even number three, I think we're going to see that cycle continue.
Speaking of cycles, for us, I have an interesting question for you. This is a little off topic, but I was having this conversation with someone. If you're looking to build wealth in crypto, okay, and you're not degenning, you're investing in solid projects, Bitcoin, ETH, Cardano, Polygon, Solana, whatever you want to call it. How many cycles would you say people need to be in and use that same strategy, that solid investment, for them to achieve actual wealth, whether it's starting with $1,000, $20,000, or $100,000?
Yeah, another super dependent question. Look, it really depends on your risk profile and how much time and effort you want to put into the space. I am heavily involved in the space, and I personally look for individual opportunities. I've got my nose and ears to the ground at all times, and I've got an eye out for NFT mints and investments here, and these opportunities constantly arise. If you're looking to be a little bit more passive and you're just looking to maybe trade in and out or invest in a more passive portfolio where you got some Bitcoin, some Ethereum, or some Cardano, some Solana, maybe like one or two other coins. You really, like, guys, you don't need to spread yourself too thin. You really don't. Any like low cap investments that you make should probably be shorter term investments, in that you're taking profits when they actually do start to pan out. You don't want to just get in a low cap and ride it down to zero in a bear market. When the bull market comes around, you want to like feed those take profits and feed that into your larger positions, or even take some stable coins out to be able to reinvest and have capital. But if you're riding a more passive portfolio of, top 10, top 20 cryptocurrencies, which is probably more suitable for most people, it really may take you a couple cycles, right? Depending on your risk threshold and how degenerate you're being. If you're willing to take some opportunities on some lower caps, it could certainly slow down the process if you're not successful, but it could also accelerate the process if you make a couple big wins. I think people often make the mistake of being too degenerate and trying to go from $1,000 to $2 million, in a single cycle. And I've seen people do that. It happens, but most of the time they don't take the profits. They let it ride, and they ride it back down to 100K or lower. Seen multiple people do that. So it's certainly possible, if you're diligent and you pay attention to the space, to find those opportunities. But yeah, you just have to. It really just depends on what your strategy is, what your risk threshold is, and how much time you're willing to dedicate.
I think that's a great piece of info. I gotta address something here. Jimmy's mad. Okay, Jimmy's mad. We got to like 290 people in the live yesterday, and apparently they expected me to open up the club. The club limit is not 250, it's 300. So I'm getting over here getting rug jokes, saying I rugged everyone. And then I got my own business partner here, Dave Rugs and Floor Tile Store. If we pull the rug, you still keep the floor. That was really funny, actually. That was very all right. You're fired. All right. Let's move on to some decentralized finance. So SushiSwap, if you guys remember, had an exploit. People lost money. Well, now SushiSwap is compensating their exploit victims. Can this bring back users? So decentralized exchange SushiSwap confronted several challenges over the last few months. After getting served with a subpoena by the U.S. Securities and Exchange Commission, the protocol was hit by an exploit which resulted in the theft of $3.3 million of funds. Now, they have recently launched a claims portal allowing victims of the exploit to claim their lost funds. Well, this is not all good, I guess. How will users be compensated? Well, only users whose funds were siphoned off in a white hat exploit will have the opportunity to reclaim those tokens, which is more than $750,000. On the other hand, users who are black-hatted won't see any claims under the new portal. Instead, they have a separate claim process put in place, which requires consent and a claim evaluation on an individual basis. That leads me to some more, I guess they're both bullish news, but Uniswap is just passed $1.5 trillion in trading volume in the month of April. They managed to maintain their dominance over the DeFi decentralized market, commanding over $4 billion in total value locked. After recording $70 billion in trading volume in March, Uniswap flipped Coinbase for the second month in a row. And I have a couple of things here from DeFi Llama. So this is SushiSwap coming in at $556 million in total value locked. Token price is sitting at just under $1.10, compared to Uniswap, $4.2 billion in market cap, with the token price at $5.59. Is Uniswap, comparing it to OpenSea just a year ago, OpenSea had the NFT secondary marketplace just by the vice, right? Is the same for Uniswap? And my stance is we need competition. Is there another DEX that has a chance at catching up or even possibly overtaking Uniswap?
Yeah, it's certainly possible. So with Uniswap, they enjoy this really nice liquidity moat. And we kind of goes back to the fractured liquidity we were talking about earlier. It's like a moat. Yeah. It's like it's difficult they just have like this nice advantage of they have all this liquidity on Uniswap. So it's like if you have, I don't know what the number is, but let's just say you have $500 million in the Ethereum USDT pool or Ethereum USDC pool. You call it 300 million or whatever. The slippage in that pool is going to be lower, and for large trades and even small trades, but for large trades, the slippage is going to be the lowest across the board. It's going to be the most competitive, lowest fee market across the board. So if another DEX wants to pop up and try to charge, they can charge a lower fee, but in order to get that liquidity and have this compete with at a lower slippage, it's incredibly difficult, because why would anyone trade on a lower liquidity DEX when you can just trade on Uniswap and get a better price? So they have that advantage. It's really difficult to dethrone them from that.
Especially when it comes to ETH. Of course, you have other chains. But now we're seeing Uniswap integrating with other chains like BNB chain, and we just saw PancakeSwap move over to a version 3 which became Ethereum compatible as well. Is that a net positive or net negative? Do we have Forrest back, Rocco? Okay, let's bring him in here.
I'm back.
I want to ask him. Okay. So when Forrest comes back, there we go, Forrest. You think it's good that these dexes like Uniswap and PancakeSwap are now incorporating other chains, or should they kind of stay in their own ecosystem and just perfect that?
Yeah, I mean, look, it's really easy for them to add most layer 2s, if I'm not mistaken. It's all EVM compatible, so it's really just integrating. Again, I'm not on the tech side specifically, but it's like the same code, just copy and pasted on a new like RPC, or I probably just butchered that explanation, but like a new network. If it's not EVM compatible, I think it's a little bit more difficult to do, but it's probably worthwhile because ultimately, it's free money for them, right? Not free money because they have to, pay the cost to actually develop that solution, but they start earning fees on all of those, all of the transactions on that new chain. And if that new chain blows up and they don't have an integration for it, then they're like going to lose a lot of users to different dexes. So they got to stay on top of it.
I agree. And again, I'm like beating a dead horse here, but we need competition, and the next biggest dex on Ethereum is SushiSwap, and they have like an 1/8 of the total value, almost a 1/10 of the total value that we see on Uniswap. All right, let's move on. Some good news for Apple. Well, not for Apple, for us who use Apple, is their outside payment ban was ruled unlawful in a likely win for NFTs and cryptocurrency space. It's a source from Cointelegraph. A California court ruled Apple violated state competition laws by barring app developers from using alternative in-app payment methods apart from their own, which includes a 30% commission. The decision may clear the path for cryptocurrency and NFT projects to add more functionality to their iOS apps. The anti-steering provision is an Apple policy stating that iOS developers cannot communicate out-of-app payment methods through certain mechanisms such as in-app links. So we've seen a lot of projects, whether it's NFT or regular crypto projects, come out and say, we can't launch on Apple on iOS because of this very reason. You think this is going to open up the floodgates for us? We're going to see more apps, and by having more apps, to your point you mentioned yesterday with the Solana phone, is if I have an app, OpenSea app or whatever case may be, where I interact money-wise versus having to go to a website and, cutting out that point of failure as far as phishing scams, is this going to open up the floodgates for NFTs possibly? What are your thoughts?
Yeah, so I don't know if Apple can just use their discretion to just remove apps from their app store that they may not like. If once OpenSea has an app on the app store, can they just say, just make up some other reason as to why it violates a different rule and just say no OpenSea app on our app store? But yeah, this is great. I would imagine over time they will want to, they will be kind of forced to allow these apps on their app store and on iOS, just because you're getting to a point where if they don't allow this functionality and crypto and NFTs continue to grow in popularity, they're potentially shedding users to Android. That's a deal breaker for some people. It's a deal breaker for me if all of a sudden Android has all of this NFT and Web3 functionality that iOS doesn't, and I'd consider switching because of that. What I do think ultimately is going to happen, though, is I think Apple's going to build all their own in-house solutions, just like they have their own bank now, their own credit card. It's through Goldman Sachs or whatever. They have all Apple Pay. They're going to have their own Web3 stack built into iOS. It's just a matter of time. I wouldn't be surprised if they're already developing it.
Huh. Do you think that's a net positive or negative for us?
Probably net positive, just in terms of onboarding. Apple's huge. There's so many users. Are they going to charge probably high fees for convenience and for the Apple brand? Yeah. But at least it'll be available. And if people don't want to pay the Apple premium, they could always go to Android, as has always been the case.
Okay. I want to move on to some altcoin news. So Zilliqa Zilliqa. They are now EVM compatible as their upgrade goes live on the mainnet. And says, here's why it's crucial for growth, but we know why it's crucial for growth. Zilliqa revealed that it has successfully launched the Ethereum virtual machine protocol and is now fully live on the mainnet. Not familiar with Zilliqa, they are a layer 1 proof of work protocol. They got a pretty big ecosystem, and we'll share that here in a second. We'll get some TA from Forrest. The EVM upgrade has helped the price of ZIL, their token, to regain its tempo after days of reeling and losses. The digital currency is now up a little under 2% over the last 24 hours. The switch to Ethereum has further positioned dApps on Zilliqa to tap massive liquidity from other EVM-compatible protocols in the Web3 ecosystem. Taking a look at some of Zilliqa's fundamentals here. It's coming in at 3 cents, at an all-time high market cap of a little over $3.2 billion, currently sitting at fully diluted $653 million. As far as tokenomics, you have a total of 17.4 billion total supply, with 93% of that already circulating. So that is a positive. They've been around for a long time, since 2018. And as far as their ecosystem that I mentioned, they do NFT, Web3, API, staking, DeFi, gaming. You can build tokens on top of it, on-ramps, off-ramps. And these are just some of the protocols on Zilliqa. Now, they got Chainlink in there as well. Now, Forrest, anything stand out on the Zilliqa chart as far as from a TA perspective, whether some good support or resistance levels?
Sure, yeah. Taking a look at the chart here, we've got the easy bands on. You can see that we've just reclaimed our 21-week simple moving average here. We're not overextended. We're not underextended. Overall price action looks pretty high. The key takeaway from this story for me is that EVM is, we saw it with Cardano recently. We've seen it with Solana. We've seen it with Avalanche. Just, everyone has to integrate EVM or they're going to get left in the dust because it's the standard, which is a bullish thing, in general for ETH. But as far as price action goes here, nothing too crazy. We've just reclaimed the 21-week simple moving average. We took a dip below it, and we've since recovered. We're in a nice uptrend here. We're towards the bottom of this kind of shorter term trend. You could look for a trend continuation play of sorts. This isn't something that I'm particularly knowledgeable on or extraordinarily bullish on, but I will throw on the easy bands just to show you guys where support and resistance may lie. So we're recently pumped above the 2x long margin pressure level, now holding it as support. You can see we found support prior on the 3x long margin pressure level. If we move these these margin pressure levels up one notch, the level that we want to get through and reclaim is 3.2 cents. And that would give us a straight shot to about 4.2 cents, which would be in this region over here. And this is a level that we've seen come into play in the past, particularly over here back in January of 2022. So could definitely see something like this playing out. But again, not a coin or that I'm fundamentally super familiar with.
Okay. Just, good to get some price levels. There are some people who are, who are interested in Zilliqa. It's not something that I have any personal investment in, but just because I don't doesn't mean it's not important to people watching. I want to give a shout out. Sailing to Crypto gifted 5 Sin City memberships. Thank you so much, my friend. We appreciate it. Guys, we are done for today. If you're not following Forrest on Twitter, do yourself a favor, man. Go follow Forrest at 00Forrest. That is his Twitter handle. Also, if you like the indicators you saw, the margin pressure levels, the easy bands, and if you want to support the channel, there is an affiliate link in the description of this video. Feel free to use it. Also, there's ways to get access to his Discord. This NFT project that he's talking about that minted for a little under 7 Solana, that's now at about 100. That was part of his research paper he published, and all the paid members got access to that about a week prior to launch. And so that alone, you would have made your money back. Forrest puts in a lot of time, a lot of effort, very, very knowledgeable in our space. So if you want more exposure to some of his research and what he looks into, go ahead and do that as well. You can use the same exact link. Also, if you're not following us, we're a little shy of Forrest's 20.1 thousand followers. We're at 4,512. So follow us on there as well. We're pretty active. We're also active on a lot of our other social media, like TikTok and Instagram and all the other spaces. If you're not, also, if you want more Forrest TA, make sure to subscribe to his YouTube channel at Sistine Research. Sistine like the chapel. Was that Michelangelo, Rocco? This is an Italian question. That was Michelangelo, right?
Even if I tell you, you won't remember.
Okay, he said yes. Now, Forrest, before we let you go, is there anything that you want to leave us with?
No, thanks for having me on. As usual, it's been a pleasure to come on and co-host. Pleasure and an honor. Looking forward to it for the rest of the week, and then we look forward to getting Robin back next week.
Well, I don't know about that, but definitely look forward to bringing you on. Guys, that'll do it for our show today. Rocco, don't rug me today. I swear to God. Rocco, it's time, baby. Guys, thank you so much for tuning in. We apologize for the technical difficulty we had, but regardless, it was an amazing show. We had a great time. We hope you did too. Make sure to come back tomorrow, same time, same place, 10:30 a.m. Pacific Standard Time. Until then, on behalf of myself, Rocco, and Forrest, we love y'all. See you tomorrow.
Peace.